What's up, guys, and welcome back to Mitchell Markets. It's very late right now, but it's Friday, and I want to go over my put credit spreads that I did this week on UNH, collecting full premium for the last 2 weeks. I have collected full premium, trading the sideways market and slightly bullish UNH. So I'm going to walk through this. I did a put credit spread on UNH with strikes at 305 and 302.50. And here's what that means basically. I sold the 305 put, which means I was willing to take on a risk if UNH dropped below 305, which was a $2.50 risk a share. So at the same time, I bought a 302.50 put. So that's where the 250 comes in. So my max loss was 250. You can see here 304 is my break even. Anything below that would start getting into a loss. Around 301 was max loss. Um, Anything above 305 is full profit, and that's why I really like spreads. When the market's trading sideways or slightly bullish, you can profit very well on premium. So, especially a stock like UNH with so much premium available with all the volatility, you can take profit with a lot less risk. A credit spread is I really don't need the stock to explode, even if it just trades sideways or just creeps up a little. I still make money as long as it stays above my short strike, and which it did. It's more about collecting. Uh, I would almost even call it passive income with defined risk rather than swings or day trades. A high probability with limited downside. And I was looking for stability, and UNH was the perfect candidate. And I'm going to walk you through my hypothesis here. We're going to look back on the past month, which is what I'm going off of. You can see UNH really holding this 300 line. So this 300 to the high is where I'm going to be having my fib, which for the sake of this video will be here because this is what I was going off prior. And last week's was 302, a 302 something, and collected a full premium off of that put spread as well. So then we are entering in this week, and on Monday, this is my hypothesis and why I entered this trade to collect full premium put spreads with UNH. So my target was that it was going to hit the 618 again, because as you can see, the entry was around this 306 mark. I did not enter my spreads until this breakdown. This breakdown was a perfect opportunity for me to get a uh, good premium and a good put price, strike price on these put spreads. As soon as it broke down, so I had a breakdown, broke below the EMA 100 and the EMA 50, which was good for me. Volume high end surpassed both EMAs. That is when I entered, and I'm looking for a reclaim on the 618, but I don't want to go all the way. I don't want to get a 306 uh, short just because in case it hit the 618 and bounce, retrace slightly later in the week. So just for an even more definitive risk, I wanted to get slightly below, and that's where I have my 305 full premium at. And it worked exactly as planned. Bounced through those EMAs as soon as it passed the 618, went up to new highs, and then from there I basically just rode it out. Came back, retraced to the 786, but no worries at all. Even at that retracement, it was still um, at my break even, and just rode it high and closed this Friday around 315. So another week collecting full premium. Such a powerful tool, guys, especially when the market's trading sideways, um, not trading volatility. You're just collecting premium off people that uh, are trying to trade volatility, which is far riskier, and you need much better movement and typically a clear market direction. So, little tired now, guys, but wanted to walk you through a neat little way of investing. Not many people do, and that's premium collecting. And this was a perfect candidate. Might be looking for a pushback down to 305 range for next week, maybe 306, 307, and hopefully I'll be able to enter some more spreads on UNH. If you have any questions, guys, drop down below and make sure to subscribe and enjoy this investing journey.